I want to talk to you about how to seriously increase your credit score by 250 points. We have a proven formula. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you're all doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I'm going to show you how to seriously increase your credit score by 250 points. Now, if you are here to learn how to raise your credit score by, say, 200, 300, or 100 points in 7 days, 14 days, or 30 days, you are at the wrong spot. There are many clickbait videos out there that pretend to show you how to increase your FICO score to 800 in 1 week. All those videos are all wrong and unethical. So if you are really serious about boosting your credit score by 250 points, then keep listening. I'm going to share with you a research-based, time-tested method for boosting your FICO score consistently and permanently. You wouldn't see results overnight when you're working to improve your credit score. You want to think of it as improving your score the same way as losing weight. You won't lose 10 pounds or 20 pounds after a single day or even a week of eating right and exercising. Your credit score works the same way. It takes a pattern of positive habits to see results, but you can definitely raise your credit score by 250 points, and you sure deserve a high score. I'm going to show you how to do it. Now, how long does it take to improve your credit score by 250 points? It really depends on your situation. But according to our research, a reasonable time frame is 3 months to 6 months. And a gain of 250 points will require some time and patience. But the sooner you start implementing positive credit habits, the sooner you'll hit your goal. And what really makes up your credit score? It's kind of important to know. You have to understand that your payment history accounts for 35%. Your credit utilization accounts for 30%, the length of your credit history 15%, your credit mix 10%, and new credit inquiries 10%. I'm going to actually elaborate on all those 5 elements throughout the show. And also, I'm showing you right now when people talk about credit score categories, you have 5 categories. And courtesy of mybanktracker.com, we're showing you right now a little recap on the screen. So you have very poor credit, 300 to 500 points, fair, 580 to 669. You have good, 670 to 739. Very good, 740 to 799, and exceptional, 800 to 850. So in today's show, we're going to try to work our way up to 800 and above. And so you have a constellation of terms. Some people use a bad credit, very poor credit, very low credit, very low credit, whatever it is. It all falls down into these 5 categories I'm showing you right now. And one thing I want to say here is that you might have different scores depending on the bureau, the credit bureau that you are looking at. So Experian, TransUnion, and Equifax, they use different scores, but overall they're pretty similar, whether you're talking about a Vantage score or a FICO score. All right, now I want to show you step by step the proven methodology, the time-tested method for improving your credit score by 250 points. Step number 1, you want to use a credit builder loan. A credit builder loan is also called a fresh start loan or a starting over loan. And if you are approved for the loan, the amount you borrow is held in a bank account while you make payments. So you typically cannot access the money until you have fully repaid the loan, which means you are able to build savings and your credit at the same time. Isn't that wonderful? It sure is. So this also acts as a safety net for the lender that's taking on the risk if you have no experience with credit or a bad credit score. With some lenders, you'll get a sum in cash and you can spend that money on almost anything from new furniture to a lingering bill. Then you pay back the loan in interest with monthly payments. Your loan provider reports the payment to the credit reporting bureaus. So as long as you don't fall behind, your score will likely go up. So your loan payments are reported to all 3, Equifax, Experian, and TransUnion. All right, this is very important. What I want to say here is that using your credit card and paying off every month is an excellent way to help boost your score. However, creditors want to see that you have experience managing both revolving and non-revolving types of credit. And a credit builder loan is a non-revolving type of credit, whereas a credit card is a revolving type of credit, right? Revolving credit refills after you pay it down and allows you to use it again and again. For example, let's say you have a credit card with 2,500 line of credit, and you put $500 worth of expenses on it. Your line of credit is now $2,000, right? Until you pay down your balance, and your credit line restores itself to the full $2,500 as soon as you pay off the $500 you spent. So you can only use non-revolving credit once, because as soon as you pay off a non-revolving account, your lender closes your account. So personal loans, mortgage loans, and student loans are all examples of non-revolving credit types. The same is true for credit builder loans. But the good thing with the credit builder loan here is that you are able to actually, especially if you have bad credit or no credit, and you're trying to increase your credit fast, because that's the goal here. We want to increase the credit score, your credit score, by 250 points or more really fast. Using a credit builder loan is a great way to jumpstart that journey. Step number 2, you want to get your bills reported to credit bureaus. Very important. Did you know that you can boost your credit with all types of payments, not just payments to credit cards and loans? You can actually boost your credit with all types of payments. The good news is that there are still plenty of ways to share your positive financial habits with credit bureaus, and this can really help you increase your credit score by 250 points. Third-party services like Pay Your Rent and Rent Track, for example, will report your rental payments to all 3 of the major credit bureaus. So we're showing you right now Pay Your Rent on the screen. This is a service that basically can take care of that for you in terms of reporting your great financial habits to the credit bureaus. And then we're showing you right now Rent Track, another great service. A third way to do this is to sign up for Experian Boost. And this is a service from Experian, of course, that lets you add phone and utility bills to your Experian report and a history of on-time payments, which, if you really think about it, can boost your credit score tremendously. So we're showing you right now the Experian Boost, the screenshot of the website, along with the link. You can also sign up for Ultra FICO, which is a new service that includes your bank account balances in your credit score. That's even better, right? Think about it. Some people don't have a good credit or no credit, but they do have a lot of cash in the bank. So if you're able to have a service such as Ultra FICO that shows or indicates partially or totally your bank account balance in your credit score, that's wonderful. That's wonderful, because that way a lender will know that even if you don't have much of a credit history, you do have a history of maintaining positive bank balances, no overdrafts, and keeping plenty of cash on hand. So Ultra FICO is the new iteration of what was formerly called the FICO Expansion Score, and it's the same basic idea to expand what goes into your credit score so more people have the opportunity to access credit. So be aware that Ultra FICO hasn't fully launched yet as of the date of this show. So all you can do right now is sign up for news and updates, but it's coming soon, definitely. So we're showing you right now on the screen the link to Ultra FICO, so you can sign up if you want to. And you can even expand beyond the FICO score and look into alternative reporting methods. So a company called Connect bills itself as an alternative credit movement and generates its own credit score based on the bills you already pay, from phone bills to subscription services. So you want to check them out if you're interested. Connect, we're showing this to you on the screen right now. And another company that we love also is called Level Credit, and they will report your rent, utility, and other payments to the major credit bureaus, and that will give you access to your credit score and key credit insights for just about $7 or $10 per month. And this is if you're kind of interested in that, you might want to double check them. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still talking to you today about how to seriously increase your credit score by 250 points. Number 3, you want to keep your payments consistent. So number 1, use a credit builder loan. Number 2, you want to get your bills reported to credit bureaus. Number 3, keep your payments consistent. Remember that Your payments history makes up about 35% of your FICO credit score. That means the best way to improve your score is to build up a history of positive payments. So are you guilty of missing a payment due date or two? This could lower your credit score, so you want to prioritize your payments with a new organization strategy. You want to sit down with all of your loan and credit card statements and please write down how much you owe on each account, your minimum payments, and your due date. This will be very helpful to you. Then you want to input the date into your cell phone calendar or write them down on your desk calendar. You may also want to authorize autopay if your creditor allows it, right? Autopay automatically deducts your minimum payments on your account's due date, so you won't have to remember on your own. And this is our recommendation. You want to automate everything. Step number 4, you want to check your credit reports. The 3 credit reporting agencies active in many countries are Experian, Equifax, and TransUnion. So they are the companies that keep detailed record of your credit and make it available to people that request it. So thanks to the Fair and Accurate Credit Transaction Act in the United States, all 3 companies are required to provide U.S. residents with a copy of their credit reports if requested once every 12 months. So to do so, all you have to do, you got to go to a website called annualcreditreport.com, and that's the only source for free credit reports authorized by this act. Okay, and one thing I want to say here is that they don't show you the scores for free though, but they show you their records of your payment history so you can check to make sure there are no mistakes. And the website lets you check your detailed report one time from each of the 3 credit rating agencies per year. So that's pretty cool. You can also pay a fee to receive more information on the sites, like the actual score, but there are better ways, there are better free ways to do that. For instance, you have Discover Financial lets you check your FICO score for free. And we're showing you right now the link to that Discover FICO score site, and you can go there to have more information. You also have a Credit Sesame that lets you check your Vantage score for free. Remember, when we talk about credit score, we talk about FICO score and Vantage score. So you can check your Vantage score for free if you go to Credit Sesame, and you have it there. The great thing about those 2 services, Discover Financials and Credit Sesame, is that they analyze your credit usage to show you specific things you can do to increase your score. It's hard to fix your credit or to increase your credit if there are negative mistakes in your credit report holding you back. So make sure they're accurate. Step number 5, folks. You want to keep your credit utilization ratio low. You've heard you probably should be keeping your credit card utilization under 30%. Here is why it's very important and how you can do it. Your credit utilization, the percentage of your credit limits that you're using, is one of the most important factors in determining your credit scores, because a high utilization rate could indicate that you have trouble paying your bills on time. A lower utilization rate is generally best for your credit scores. So what I'm trying to say here is that let's say you have a 5,000 credit limits and you spend about 1,000 during your billing period. Your credit utilization rate will be 20%. In other words, if you divide $1,000 by 5,000 and you multiply that number by 100, you get the percentage. Okay, it's very important, and there are several ways to change your balance or available credit, and this can help you improve your credit utilization rate and your credit as a result. 6 things. You want to pay down your balance early. Very important. One tricky point about credit card utilization rates is that your usage depends on the balance that your card's issuer reports to the credit bureaus, not how much you spend each month. So those 2 numbers aren't always the same. You also want to decrease your spending. So if you're working to pay down credit card debts and can't afford to make partial or full payments early, it can be helpful to stop using your credit cards to make purchases in the first place, right? Because otherwise, your new purchases may offset your payments and your credit utilization rate will not go down. So you want to keep your CUR down. You want to pay off your credit card balances with a personal loan. That's a good strategy too, because credit utilization rates are a reflection of how much you use revolving credits. You could take out a personal loan, pay off your credit cards, and effectively move the debt to an installment, potentially with a lower interest rates than your credit cards. Okay, and an installment loan is a loan that you repay with a set number of scheduled payments over time. So types of installment loans include auto loans, mortgages, and personal loans. Also think about increasing your credit limits. This is a great way to improve your credit utilization rate. And you can call your credit card's issuer to request a credit limit increase, or you may be able to make the request online. Okay, and also think about opening a new credit card. Another way, that's a great way to actually increase your available credit. You will not necessarily know what the credit limit will be until after you are approved, because it depends on the issuer's consideration of multiple factors such as your income and credit history. Some cards may have a minimum credit limit. And do not close, and this is very important, folks, do not close unused cards. As you take steps to get your credit in order, you may want to clear out financial clutter by closing credit cards that you don't often use. While this could make managing your wallet easier, closing an account can also lower your available total credit and increase your credit utilization rate. Very important. Number 6, you want to diversify your credit mix, folks. It's very important if you want to seriously increase your credit score by 250 points. You want to diversify. The diversity of your credit mix accounts for about 10% of your credit score. So it shows the credit rating agencies that you can responsibly manage several types of debts. Don't take out debt you don't need because it actually results in unnecessary interest payments. However, you can be strategic, folks. Try to be strategic with your debt. For example, if you have a credit card debt and your credit score is decent, then taking out a peer-to-peer loan like with a Lending Club or Lendio can help you pay off your higher interest rate credit card debt and diversify your credit mix at the same time. Or let's just say you have student loans and you need to get a car. Taking out a small auto loan to finance part of it and paying down some of your student loans quicker with the cash you save, the cash you save upfront means that your credit score is more diverse. Step number 7, and this could be very helpful to you too. You want to get a secured credit card. So if let's say if your credit score is very low or non-existent and you don't have any credit cards, then consider getting a secured credit card. And this kind of card is a low limit card that a bank can issue to you that requires you to pay them a security deposit up front. That way, their risk is very low and they can afford to give a small credit line to people with low or no credit. And many of the major issuers like Discover and Capital One, Chase, Citi, they have good offers on secured cards. Typically, their credit limits are tiny, like $200, $500, $300. Pretty much the only reason secured credit cards exist is to help people build credit. So you want to start making some purchases with a card and pay back in full every month. Over time, you'll start building a positive credit history. And make sure your other payment types like utility bills, student loans, mortgage, auto loans are paid on time as well. Eventually, when your credit score is higher and you have good credit card habits, you want to ask your issuing bank to convert your account to a normal unsecured card. That way, you can get a higher limit, get better rewards, and get your security deposit back. So this is a great strategy. Whatever you do, though, do not close your secured card unless for some reason you absolutely cannot handle having credit. You want to start building a long-lasting credit account because average credit age is a big factor for your credit score. So once your score is up, you want to convert it to a better card. All right, folks. This was it for today's conversation. I was talking to you about how to seriously improve or boost rather your credit score by 250 points. And there are 7 steps, and those 7 steps constitute a proven, time-tested methodology. First, you want to use a credit builder loan. Number 2, you want to get your bills reported to credit bureaus. Number 3, you want to keep your payments consistent. Number 4, you want to check your credit reports. Number 5, you want to check your credit utilization rate. Make sure that you want to keep it low. Number 6, you want to diversify your credit mix. And number 7, last but not the least, get a secured credit card if needed. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.